Here now, Andy Lipow, Lipow Oil Associates President, my go-to man on everything oil, natural gas, gasoline prices, diesel, you name it. Andy, will meeting with the Crown Prince, remember Biden called the nation a pariah state before he took office as the president. Will it make a difference to getting Saudi Arabia and OPEC Plus to pump more oil, you think?
Well, this may make a difference. It's a very important meeting. From the president's standpoint, he is going over to Saudi Arabia to begin repairing relations with that country and wanting Saudi Arabia in particular to increase their production and make up for OPEC Plus's shortfall. For MBS, it's also an important meeting because he's going to get really the recognition from the President of the United States that MBS, in fact, is the de facto leader of Saudi Arabia and will be for decades to come.
What about here at home, Andy? President Biden, there are all these policy initiatives that are on the table. Maybe we'll find out later in the week what happens, but getting a moratorium on the federal gas tax briefly, even checks or cards being sent out to people, all of that was on the table certainly in the last few days. But does that make the problem worse when you need to have some sort of natural demand destruction that happens to offset the supply shortages or the supply tightness that we have, particularly in refined product?
Well, there's two things the administration can do to immediately lower the price of gasoline. One, of course, is to suspend the federal excise tax of 18 cents a gallon. But as you point out, that does nothing to decrease demand. In fact, it keeps demand steady, and it doesn't do anything to get more oil out of the ground. The second thing that they could do, which I think could substantially reduce gasoline prices, is ease the EPA regulations on the type of gasoline that we're selling during the summer. That would enable refiners to actually make more supply and make the gasoline that we sell cheaper to produce.
But all they've shown that they're capable of is vilifying, particularly U.S. oil companies and refiners. You have President Biden called out ExxonMobil in name a week ago, about a week and a half ago. Meantime, how does that look when you vilify ExxonMobil, but then you go overseas and are going to be begging the Crown Prince of Saudi Arabia to pump more oil, number one. And there will be a meeting later this week with major oil companies and refiners, but the president isn't even going to that.
Well, the president has spent a lot of time complaining and vilifying big oil and the oil refiners. But what I will say is the oil industry has responded to higher oil prices. The rig count is up by 60% compared to this time last year. Production has just ticked up to 12 million barrels a day. It makes the U.S. the largest oil producer around the world. We expect production is going to increase to 13 million barrels a day next year. And as far as the refineries go, the refinery shutdowns that we've seen over the last couple of years have actually been in response to the pandemic reducing demand and the fact that refiners are getting older. They require hundreds of millions of dollars in investment to keep them going for the next 30 to 40 years. And when you have an administration that has really explicitly said that they want to reduce our reliance and use of fossil fuels, it's very difficult to make that investment to keep them online.
There's some that are scheduled to shut down, right, Andy? Some major ones in the next year or so.
We have two more refineries that are expected to shut down next year, one in Houston, one in California. And especially when we look in the California market where Governor Newsom has issued an executive order where he wants to ban the sale of gasoline-powered cars in 2035. You've got environmental regulations in the Bay Area and Los Angeles that are getting more onerous that could cost refiners hundreds of millions of dollars to comply. They're on the trajectory to really put refiners out of business. And this is actually coming from, ironically, a state with the highest gasoline prices, and they're increasing their state excise tax by 2.8 cents a gallon on July 1st.
That is really intentionally screwing over lower income Californians. That's what it does.
It makes it very difficult for those who are living paycheck to paycheck, especially in California, where gasoline prices are well over $6 a gallon.
It does. Andy, we will have you back and talk about, there's so much to discuss, but you think gasoline prices have peaked out. You think, where is nationwide average going to be, you think, in a week or in a month?
Well, I think there's temporary relief for the consumer. Right now we're at $4.98. I expect that gasoline prices are going to drop another nickel over the next week to 10 days. We may get the national average down to $4.90, but this has been a hugely volatile market that's reacting to every headline that comes out in a very large way.
That is 79 cents higher. $4.90 is 79 cents higher than the previous record from 2008, the summer of 2008, just to put that in perspective. Andy, Thank you so much. Andy Lipow, great to see you, sir, always.
Thanks for having me.